Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Austin Wiley. Austin is the CEO of Sky Leasing. He's joining us for the purposes of our Aviation Leaders Report for 2024. And I should say we're recording this in late November. Austin, thanks as always for giving us your time and insights. Before we get into the meat of the conversation, do you want to tell our watchers a little bit about Sky Leasing?
Sure. Sky Leasing is an alternative asset manager. We focus on the new and young midlife aircraft space, and we primarily acquire these aircraft through sale and leaseback with our global airline customer base. Today, the firm has about $4 billion of assets under management, and we fund ourselves through a series of funds that we manage on behalf of institutional investors.
Excellent, Austin, and we'll touch on the investor base in a bit of detail shortly. But before we go there, can you talk to us about customer performance, right? We've seen obviously strong demand. You might talk to us what you've seen that from an airline perspective, and are there particular opportunities spread in different geographies for you out there at the moment?
I think as you look at 2023, you have to say in the aggregate, airline financial health is very strong. But a key difference from 2022 to 2023 here is we're transitioning from really a broad-based recovery to a more differentiated recovery. Some of that is a fact of the different regions of the world recovered from COVID at different times. But now we're seeing the impact of airline management teams and the decisions they made during COVID and what that is leading to in terms of their profitability and growth prospects post-COVID. And that differentiation is really going to continue to play out in 2024. If we take the US market, it was the first to recover. It's now the first to be showing some signs of weakness in the domestic leisure market. But if we compare it to network carriers where there's exposure to both long haul and short haul traffic, we still see profitability there. In the aggregate, we like markets where there's been consolidation, where airlines have been able to effectively restructure their balance sheets and deleverage. And so, those markets continue to be healthy, and markets like Asia, where clearly they were a laggard in recovering, are still in the early innings of that demand recovery.
So a strong performance in Austin across 23, as you said, broadly across most markets. As we're looking out into next year, your thoughts around the risks that might exist, both from a macroeconomic or geopolitical perspective, and how that's impacting your thinking for where the business might go over the next 12 months?
Sure. We see the two key macroeconomic risks being the transition from relatively cheap costs of money to a higher elevated interest rate environment we're in today, and inflation. I think we've transitioned from what was viewed as kind of maybe a temporary interest rate rise into now higher for longer. And the airlines are now starting to have to feel the effects and manage through inflation, which really shows up in wage inflation. Today, we're seeing non-fuel costs at the airlines go up, in some cases, 20–30%. And these are significant moves that the airlines need to now manage to achieve their P&L targets.
And then when we think about, I suppose, the market on the demand side being strong, the key challenge we're seeing is clearly on the supply side. Can you talk to us about how that, as you think about that as an asset manager who's seeking to access predominantly, as you say, new metal, new technology, what challenges is that throwing out?
I think this really is an environment where you have to be nimble, right? Clearly, we're in a shortage of aircraft. If we take assumed production from the manufacturers in 2019 and compare that to actual production today, we're anywhere from 3,000 to 4,000 aircraft short on the supply side for new aircraft. And so what that means is now we have a very tight market for midlife aircraft. We're seeing strong demand for midlife aircraft because airlines simply can't get the number of aircraft that they need for their fleet plans. This is where we have an advantage as an alternative asset manager. We can look at both new and young midlife aircraft and make a decision about what is the best risk-reward proposition. So as a result of the shortage of aircraft on the new aircraft side, we're probably slightly more oriented in that young midlife space today. But we do see that continued transition, that fleet replacement happening. And the airlines are increasing production rates over the next 2 to 3 years quite dramatically. And so we're not concerned about the ability to get the supply of origination that we want because we're able to access both channels, both young midlife and new aircraft.
And obviously playing in that midlife space means getting into the trading environment. And trading environment has probably been definitely diluted from where we were pre-COVID. We maybe a third of the same aircraft are trading at the moment. Can you talk to us about the availability of assets in that secondary market as you maybe move into a midlife space, as you say, to take advantage of the returns that are there?
I think the decisions in the midlife and the secondary market really are driven by, sellers trying to both manage their portfolio, looking at their portfolio metrics for weighted average age and lease term, but also managing their debt maturities and their profitability metrics. And we see that really continuing into the next year, primarily on kind of liquidity-driven trading, where we're ultimately seeing sellers need to generate liquidity, either because they're exiting the space or they're managing refinancings or they're managing P&L, and that ultimately is creating an attractive buying opportunity for us.
And maybe talking about asset values, Austin, can you talk to us how they have evolved? And particularly curious over the impact that we're seeing on maybe lease encumbered assets and some of the leases that were written at the outset of COVID when we were in a lower interest rate environment.
We expect asset values to continue to firm and increase over the next several years because of that fundamental supply-demand mismatch that I identified earlier, where the industry simply is not going to be able to recover from the 3,000 or 4,000 aircraft that should have been built in this decade. There is a challenge for people that originated assets in a lower interest rate environment, as you alluded to. In most cases, we see those deals having been properly hedged, and therefore they can still trade those transactions. If they weren't able to use hedging in the low interest rate environment, it really will come down to how did they acquire that asset? Did they acquire it at a significant discount such that they can justify selling a rent that is probably below where market rents are today? But clearly, there's probably less liquidity in those assets that were originated in that low interest rate environment, just because today of the dramatic move in rates.
And maybe bringing back to another supply side challenge is on the engine front. So we've had general engine challenges and access to shop visits, the time it's taking in a shop visit, and now we have the GTF challenges that are well publicized and will have a material impact on the market. Your perspectives on the engine situation as a lessor, can I get your thoughts on that?
Yeah, we view it as a significant challenge for the airlines. Unfortunately, it impacts smaller airlines in a greater way. They just have less capacity for spare engines and less financial ability to withstand really the additional operational costs and headaches that come from what are pretty significant groundings. 10 to 20% of an airline's fleet in some cases they're forecasting for 2024. So today we spend a lot more time talking with our airline customers about what are their contingency plans for these technology disruptions. Do they have sufficient spares? Do they have the right mix of aircraft such that they can continue to operate? But ultimately, we are concerned about the airlines' ability to operate effectively with that high a percentage of fleet on the ground in the near term.
And maybe bringing it back then around lease rate factors, if we talk about a heightened demand environment with challenging supply, an interest rate environment that has probably settled in a higher place, lease rate factors should be shooting up, right? And there's always a bit of a lag, but it seems as if that lag is catching up. Can you talk to us what you've seen from a lease rate factor perspective?
Yeah, I think in 2022, we had a very significant rate movement, and that ultimately created that lag effect that we all speak to, where cost of funds shot up, but lease rates weren't moving at the same rate of speed. What we've seen in 2023, I think, is a much stronger secular shift, which is there's just simply a shortage of aircraft. And today you have multiple airlines wanting that aircraft, and that's driving up lease rates just as much as benchmark rates are. And so today, I think it's a much more healthy, demand-driven rise in lease rates, which is what we really like to see ultimately. And we expect that to continue for the foreseeable future.
And then maybe focusing on the liability side for asset managers and lessors, can I get your perspectives on the overall health of the aviation debt markets? So we're in a higher for longer period with higher rates, but can you talk about the availability of debt capital? And it's obviously something in looking at Sky where you've done secured, you've done capital market ABS. Can you talk to us a little bit about your perspective of where that market is, and as you go and look at new transactions, what's looking the most attractive?
Certainly the cost of capital is up significantly, particularly if we were to go back to 2021. But importantly, what we've seen is spreads have not widened out. And in fact, for most products, we see actually some spread tightening that's occurred this year relative to prior years. If you look at just the volume of issuance, clearly capital markets is down significantly. Both airline issuance and lessor issuance, whether that's secured or unsecured. And that's really a testament to the airlines wanting to be patient, using cash where they can to fund aircraft, and also for lessors wanting to manage their maturities. On the bank debt side, it remains very robust. If we take our own business, for example, we've raised over $2 billion of bank debt this year. And we continue to see strong demand from our banking partners. I think the liquidity crisis that we saw earlier this year with SVP and the regional banks, as well as relative underperformance from the investment banks, probably will start to impact the availability of capital next year. But that's really going to manifest itself in lenders being more selective in who they partner with, rather than a full stop on issuing aviation debt.
And maybe to pick up two tranches to get your thoughts on. The first is the alternative lender class, which we've probably seen, increase in popularity. Would welcome your thoughts as to how important a role they now play and whether that role will increase. And maybe the second is just on ABS. So obviously when you did the SLAM transaction, you achieved, I think, record rates in relation to that ABS. It's obviously a challenge market in aviation at the moment. Just your thoughts on those two areas.
Yeah, sure. We see the alternative asset manager, or alternative lenders, I should say, kind of continuing to play a niche role, primarily midlife aircraft, end-of-life aircraft. We don't see them offering a cost of capital that's really competitive for new aircraft or young midlife aircraft. We see other markets being much more competitive. So, I think they've settled into their niche, and we don't really expect much growth beyond where they are today. In terms of the ABS market, I do think we'll see an uptick in issuance next year. I think that's a result of managers have been able to adjust their pricing models for the new cost of capital, but also there's a number of refinancing deadlines that are coming up. If you raise capital in 2020 or 2021, you're now going to need to make that decision to refinance. And ultimately that will manifest itself in more ABS transactions going forward.
Yeah, it'll be interesting to see, as you say, how that market does evolve into 24. Shifting gears into the investor side, Austin, obviously, is an asset manager. You spend a lot of time talking to people about aviation finance and attracting them to the various funds. Can you talk to us about any evolution you're seeing in the nature of investors that are showing an interest?
Yeah, I think what we're seeing today is investors that came into the market on the heels of the dislocation of COVID. Clearly, they're starting to exit, right? They're wanting to crystallize their returns and move into other asset classes that may have dislocation. When we talk to investors today, broadly what they're seeking is investment opportunities that offer a return that it has low correlation to broader fixed income and equity markets, something that gives them a hedge against inflation, and something that really offers true downside protection through the cycle. And I think aviation as an asset class can offer investors a solution for each of those, right? We've proven through COVID the stability of this asset class, where asset values for the most liquid aircraft have moved less than 10%, despite demand being down 80 to 90%. Clearly, as an asset owner, you benefit from inflation. Residual values are going to go up as a result of inflation. And we've seen, because of the long-term contractual nature of these leases, that there is a low correlation to broader markets, where we've seen successful transactions in the M&A space where values continue to hold up despite broader volatility in the fixed income and equity markets.
And maybe on that M&A theme to get your thoughts, right? So obviously you've been involved in M&A through various iterations of different leasing structures, and we have seen some M&A. Obviously the AerCap GCAS transaction kind of stands apart. Probably that aircraft, 100 to 150 aircraft type portfolio, when you take in Standard Charter, Goshawk, AMCK. Do you think that's a trend line we will see more of? And in addition, on the consolidation side, do you think we might see more amongst the asset manager classes, as maybe some struggle to kind of access the investors and package the right solution for them?
Yeah, I think it'd be fair to say we expect continued M&A activity in that 2 to 5 billion range, which probably translates into 50 to 150 aircraft size. And in terms of the alternative asset managers, I think it's really a decision driven by their business strategy, which is clearly there's a cost to have a platform that is originating, and that cost is higher than just servicing assets that are already in the ground. And so what we'll likely see if we see continued consolidation in the asset manager space is, really the owners of those assets trying to more efficiently service those assets and recognizing that they don't want to continue to deploy capital and therefore don't need such a significant SG&A or platform to do so.
And looking again maybe at the wider leasing market, we've seen the long-term trend of leased assets kind of tick materially upwards probably during COVID, where lessors or asset managers were probably funding maybe 60% of new deliveries or near that number. As airlines generate more cash, do you think we might see that trend reverse ever so slightly, where instead of being somewhere in 50 to 55% of assets, it ticks below 50 again?
Yeah, I don't think that we'll see the trend reverse. And the reason for that is, I draw an analogy to the hotel industry, which is, the hotels have learned that they can really separate the real estate from their core product of delivering a hospitality experience to the customer. And low-cost carriers have adopted that model. They recognize that they want to create value through selling tickets to the passengers, providing ancillary revenue, providing vacation and holiday packages, and they don't need to own the asset to provide that service. And so when we look at low-cost carriers, we see a much greater propensity to lease, anywhere from 60 to 80% of a low-cost carrier's fleet could be leased. And as a result of that, I think we'll continue to see north of 50% of the world's fleet be leased. But clearly, network carriers want to own aircraft as a part of their strategy, but they also will continue to access the lease channel. And so I think we're just at really a mature stage where 55%, 50% is probably the long-term average and the right average for the percentage of leased fleet.
No, then I think interesting thoughts, right? And shifting gears again, can we talk around the environmental challenge that's there, and really very curious the impact it's having on your business now. So you, to date, and I know you mentioned midlife at the start, have funded, new tech, fuel-efficient aircraft. But when you're talking to investors or debt providers, how high does the climate change challenge feature on those agendas?
Sure. I'll take investors first. It is a part of the conversation. Investors do ask us, what are our ESG policies? What are the ESG policies of our airline customers? But we don't see them introducing it as a formal part of their investment criteria. So they're still focused really on what are the risks, what are the returns that you're generating, and what are the risks you're taking to generate that return, with ESG really being secondary. In terms of lenders, we are seeing in the bank debt market, lenders establish kind of ESG scores for their aviation loan books. And as a result of that, they're reducing their exposure to less fuel efficient aircraft. So we do see the bank market pulling back, particularly in Europe, around financing of midlife aircraft, but we don't see that same phenomenon happening in the capital markets. So the capital market seems to be adopting more of a carrot approach, if you will, which is if you are green, we'll give you a modest discount on your coupon, but not penalizing less fuel efficient aircraft. where I think we need to drive the conversation is really, we have a very narrow focus of E, which is fuel efficiency, but clearly there's a lot more that goes into being environmentally friendly than simply fuel efficiency. And so I would like to see the discussion broaden to factor in, aircraft recycling, aircraft replacement costs, converting an aircraft from passenger to freighter and utilizing what's already built should be considered green as much as just fuel efficiency is.
I guess when we think about it in a European context, we probably have some regulatory disclosures coming down the line, and we look at lessors maybe being Scope 3 emitters. Does that give you any cause for concern, or you're like, look, it'll be what it'll be, I've got a young fleet? Just are you thinking about those potential reporting obligations that are coming down the line?
Yeah, certainly we are aware of those reporting obligations, but we see it as a level playing field where it's not going to disadvantage one over the other. But ultimately, the fleet of aircraft is significant for a current generation aircraft, and there needs to be capital to provide financing for that fleet. And so, I think it's incumbent on government officials really to recognize that transitioning too fast can create significant harm as much as transitioning too slowly.
Yeah, and I think your recycling point on that, where we nearly landed with the EU, is probably a very good cautionary tale to that point. Just in closing, Austin, can I gauge your optimism levels as you look out into 2024?
Well, naturally, as an entrepreneur and CEO, I'm always optimistic. But certainly, if I take your question and slightly tweak it and say, what do I have conviction around? I have conviction that asset values are going to continue to increase for the foreseeable future. That's really a result of that supply-demand shortage that we're in today, where the manufacturers simply just aren't going to be able to increase production to make up for the lost production during COVID, and then also inflation. I have conviction that the market is probably too optimistic around interest rates going down in 2024 and inflation. We believe both will probably be at the levels they are today for the foreseeable future. And I have conviction that the airlines that took the hard choices during COVID to restructure their fleets, to re-equitize their businesses, they're the ones that are going to be the long-term winners. They're the ones that are going to benefit in the near term from consolidation. And ultimately, those are the ones that we want to back with our capital.
Austin, I'd like to, on behalf of KPMG and Airline Economics, thank you as always for your time and insights, and wish you and Sky Leasing a very successful 2024.
Thanks, Joe.